Market, stocks, and money. Good day, everyone. This video is going to outline the most important news that took place over the last week in the financial markets. So let's dive into it. So first, let's look at the SP 500 index, which has climbed itself up to 20% and stabilized itself towards the end at 15%. Dow Jones index has also climbed itself up to 23% and stabilized at about 18%. So what we can see is that the markets towards the end of the week have started to get towards the negative zone, and we can see that the red candle at the end is kind of indicating to us that the markets may go down further. So what can we tell from all of this just from the overlook of the indexes? We can see that the markets don't know themselves where to go. They're in the way of fighting. You've seen a lot of good news, especially coming from America, for stabilization of the company and inflowing into the money into the markets, and as well as a lot of negative news coming up from the coronavirus. So like I said, nobody knows where it's going to go, but we have seen a good and a very strong technical rebound back. Over the last week, it's been stated there's been a lot of requests for unemployment benefits, which has already climbed up all the way to 3,280,000, whereas if you compare to previous week, it was only 280,000. We're already beating the records from 1982, where it's climbed all the way to 690,000. So we can see that people are losing jobs. Companies are closing, and everything's kind of going towards more of a negative note. The recession is always followed up with the loss of jobs in different sectors. For example, if you take a look at the 2008-2009, a lot of people lost jobs in mainly three sectors. It was the financial sectors, the banking sectors, and as well as the real estate. Now, as with the news that's happening right now, and the reason why the markets are falling is because people cannot work together. It's because they have to stay away from each other, and now that the governments and the countries are closing the borders and everything, people are no longer allowed to collaborate with each other. This is why the markets are going down. As you might already see from the news, this downturn is going to hit hard the retail industries, because people cannot really work from home, like for example in banking and financing industries, for example like JP Morgan, or technological companies like Microsoft and Apple. Retail is where people actually have to go. So obviously when sectors like that are going to close, they're going to be losing profits. And if they're going to be losing profits, investors are going to be further turned away from these companies. Further due, based on the news, based on the overlook of what's happening in the market, let's actually dive into some of the news that's taking place right now. Probably the most important news that we've heard since the beginning of this week is that American government is ready to release approximately $2 trillion into the markets. Not really into the markets, into the whole system itself. Now, let's actually look into separate sections where the money is going to go. Let's first look at the direct relief. Now, that's about $954 billion, and the $300 billion of it is going to go to the households. Now, the way it's going to work is that each adult who makes less than $75,000 a year is going to receive approximately $1,200. And each child is going to receive $500. The $250 billion is going to go towards unemployment insurance. And the way that's going to work is going to prolongate the period from 26 weeks to 39 weeks. And then it's going to provide $600 more for each week for the next 4 months. $150 billion is going to go as a direct aid to states. And $221 billion is going to go towards the small businesses. Now, the way that they eradicate them is that the small business is evaluated if it has less than 500 employees in a single area, and the fact that the grants are going to be released only if the business doesn't fire their employees. Now, we can see that's a very advantageous thing in a way that the people are not going to be losing their jobs as quickly. So the businesses in a way to see the money, they're going to have to keep the employees back in the state. The $32 billion out of this package is going to go towards the grants for passengers from the airline industries and for the wages for the personnel, since they've been hit really hard. Now that the borders are closed, there's no flights taking place anywhere pretty much. The next one we're going to look at is the loans section, which consists of $849 billion. Now the $349 billion out of it is going to go towards as a loan to small businesses, which utilize the money towards rental, towards payroll payments and utilities. Now, the interesting thing about this is that they will not have to repay this back. The $454 billion out of this is going to go direct to other businesses in a way if the state takes the equity as part of its company. $29 billion is going to go again to cargo and passenger airlines to help them sustain their business. and $17 billion is going to go towards Boeing, which is seen as a national security. The reason that it doesn't just manufacture the passenger airplanes, it also makes military airplanes. The final section is going to be the supplemental. It's pretty much like other spendings, which consists of 340 billion overall, and 117 of it is going to go to the hospitals, and the 25 of it is going to go to transport. So this is pretty much outlines where the money is going to be spent. Now, if you look at the previous times, it is so much bigger than, for example, what it was in 2008 and a little bit after that, 2009. If we were to look at what was happening in 2008, when the markets were dropping, initially the Federal Reserve was providing about $152 billion to sustain the markets. After it started stabilizing a little bit to help them support and come up further, it was providing $700 billion and $787 billion. Now, altogether, if you put that, that's going to be about 1.7 trillion. Now, look at what's happening right now is that the Federal Reserve is putting about $2.1 trillion when the market is dropping. Now, that's crazy. Think about what's going to happen when they're going to start stabilizing and the companies are going to need a lot of money. And obviously, along with that, the news that we received last week is that the Federal Reserve and the government itself is prepared to put in as much money as possible into the market. This is quantitative easing. So this means that the government is ready to supplement the money until they pretty much run out. I don't know when that's going to happen. I don't think if that's going to happen, but they're prepared to invest as much as they can to avoid the market collapse completely. This was very big news. Well, too big news. And this sort of can allow you to understand what's happening in the market and kind of help you not predict, but to understand what's going to happen in the future. Now, let's go away from this a little bit and let's look at some digestive news and that's actually happened in the companies. So there's a bank, which is called SoftBank Group in Japan. And what's recently happened is that Moody's has dropped their rating from Ba1 to Ba3. Now, that has come as a very bad news to the company, to SoftBank Group, and they actually declined their services further. The reason why Moody's dropped their rating from Ba1 to Ba3 is the fact that they have found something shady in the bank. And what I mean by shady is that they found the SoftBank Group has sold assets of approximately $41 billion and reused this money to rebuy their stocks and bonds. Now, why would the company do that? As you can see, all the markets are dropping right now. And obviously, when they rebought all of their stocks, their shareholders understood this. Is that in a way that if they hold their shares, they're going to climb up in their value. This can explain the reason why Moody's have dropped their rating. But SoftBank Group is saying, guys, you've announced such a big thing that you are dropping down our ratings. Now our investors are no longer going to want to invest in our companies. Now, what's actually happened, and the reason why I'm telling you this, is if you knew the news that SoftBank Group is prepared to rebuy their stocks, and especially at the amount of $41 billion, that's a lot. The investors are going to expect the shares to rise. And if you look at what actually happened, is that in a period of just 10 days, the price has risen over 50%. Now, another reason why I'm telling you this is that you didn't need to know the news so urgently. The price rose to 50% in 10 days. Even if you knew the news only 2 days after, you would already make substantial profit. The other side of the story is that it can be problematic to the shareholders who are holding SoftBank Group. Now, why? Is that because if you dig further in the company, you can see that they have a long-term debt of about $70 billion. Now, what do they do with the money? They sell the assets and they don't cover the debt. They rebuy their stocks. So nobody knows what can happen. So let's actually look at the next week to see what happens. But I would assume that if such an organization such as Moody's and they lower their ratings, I would assume that the stock price will go down. The next section of the news is going to cover the technology part of it. And it's probably going to be interesting to the people who are very interested in technology. However, we can also look at this from the stock point of view. Now, it's going to be talking about Huawei. Now, the company has stated that approximately 90% of its workers, or even probably more, have returned back to work. That's obviously following the news of coronavirus. And that's exactly what I'm saying what's going to happen in the rest of the companies as soon as the good news come out. Because what's happening, the quarantine is down in China, people are coming back to work. So the company is starting to regenerate itself, it's starting to grow. Another very interesting news is that the company is prepared to invest about $20 billion for next year into research and development. That's $5.8 billion more than last year. Now, I'm going to go to a little bit of details why they're doing it and what can outcome from this. The most significant reason to this is the fact that Huawei are restricted from the use of American software technologies and hardware technologies as well. So if you can look at this from another perspective, is that the company is reinvesting back into itself in order to develop its own structure and own products. Everybody sees this as a big investment, and of course it's a big investment. Now, obviously, it's difficult times when you rely on somebody else, especially a company like Google. So investors can see this from a different point of view. They can see this as a big investment into the company itself, and they can expect their shares to rise in price. Some people say maybe Huawei can overtake Google. I mean, I doubt it. I don't know what's going to happen, but you never know. So some early investors who decide to invest now can really benefit in the future. The company Huawei is situated along the lines with massive players such as Amazon, such as Alphabet, such as Apple. And you can see that from this chart above is that Amazon is investing a lot of money. They're investing about $36 billion just to research and development. Imagine what's going to happen in the following years. The further news are going to be touching up on G20 meeting that took place recently last week. So what has actually happened in the meeting, and what can we take from there? Well, I'll tell you, pretty much nothing. All we know is that the guys have talked between each other and they said that they're going to invest all over the world about $3 trillion, considering that America is already already providing $2 trillion altogether. I'm going to read one of the statements that the guys have said after they've met, and in order to reassure the people around the world. So they said, "We commit to do whatever it takes and to use all available policy tools to minimize the economic and social damage from the pandemic, restore global growth, maintain market stability, and strengthen resilience." Wow, strong. Is this actually going to happen? Well, the markets are dropping. Well, let's see. The outcome of this meeting has been stated in different journals. And for example, in the Wall Street Journal, it pretty much states that nothing has been resolved. Nothing has been concluded and the guys don't know what to do. And one of the reasons that the guys are saying this is because they didn't have enough time to discuss and to come to the final conclusion. As would bother most of us all, we would expect the problems with regards to oil price to be resolved there. It wasn't resolved, nothing happened, nobody knows what to do. America thought it was going to come to G20 meeting, pressure down on Saudi Arabia and as well as Russia, and the price is going to go up. No, it's not going up, nothing has been taking place, and I would assume that the small scale companies in America who are producing oil are going to go bust soon. So this was in a way of a mixture of news, and it was an overview of what's happening in the stock market. Now, again, like in the last video, I asked you, what do you think is going to happen? Well, nobody knows what's going to happen. But we can look at the past. We can see what happened in different times. For example, the most recent one was obviously 2008. And you can look at 2014, what happened on the Russian market. Everything dropped and the dollar price rose a lot. Now, from 2008, we can see that in a way it was a rebound back when the stock market started going up, but it started growing steadily. It was in a way of reaching at about 48% in the returns on the income in the companies, but only after about a year and a half. Another interesting thing that I wanted to talk about, and a lot of people ask me, why do I talk about the American market so much? And why do I invest in the American market? Well, the reason to this is that I defend myself against deflation of the ruble. Now, how does this happen? Let me give you an example. For example, you've invested into Gazprom. Gazprom is falling, and take a note is that you invested into Gazprom in rubles. Now, Gazprom is falling, let's say 20%. No, it's more now, but let's say that. So you lose 20% on that, and let's say the ruble to dollar has dropped another 20%. So you lose 20% on the stock, and you lose 20% on the dollar-ruble ratio. Now, on the other hand, if you invest into American companies, let's say you want to return the money back to yourself in rubles, let's say in 10 years. So what's going to happen is that, for example, you invest into similar company, let's say JP Morgan, and it drops 20%, right? Yes, you do lose 20% on the market, on the stock market, but if the dollar to ruble rises and it causes you 20% drop, you're going to regain that and you're going to go into neutral position. So in a way, even if the market drops in the long term and the ruble stays high, you're going to be in a neutral position. You're not going to lose, but you're not going to win either. I hope that this video has helped you in a way to overlook what's happened over the past week. I know I haven't covered all the news. I mean, that's impossible. It's going to have to be like a 9-hour video, you know. But I do try to stay in the trend, and please visit my Instagram profile. It's the same name, Investonovich. And what I do there is I release daily the news from the Wall Street Journal, from Financial Times and other journals, and to help you see what's happening in the market. So thank you very much for watching this. Put your likes down, subscribe, and let me know. Thank you.